Hello everyone. It's been a good few days. We haven't seen no action on the oil markets actually. Oil has been moving sideways. As a result, the previous position that I took hasn't really materialized, and I haven't really gained nothing. So let's have a quick look at this and see what we're going to do next, because it's an interesting time actually. Alright, so let's have a look at the oil chart to begin with. Let's see what's going on. Alright, let's have a look at 1 day. And as you can see here, for the last 5 days, oil has just been moving sideways. There's been a few attempts to sort of push out, but nothing major really. If we zoom in, let's zoom into this area here and see what's going on, because as you can see, clearly oil is at some sort of resistance. 25 was the sort of level where you expect some sort of turbulence. The next level here clearly is around 33 mark. I'm not so sure if it can go to 33, to be honest, because we've got next week we've got June oil expiry. So I have a feeling there's a lot of uncertainty in the market because of this. People are just waiting on the sidelines for some further updates, perhaps on storage, perhaps by the EIA, or perhaps by OPEC. So let's look at the hourly to get a view of what's happening. Again, the hourly always helps us with our timing, and as you can see, WTI has just been moving sideways. There were a few attempts where oil just tried to break further above and it got pushed back down, break above, pushed back down, and then there was another attempt and it was just brutally forced back down. There was another attempt yesterday actually here. I'll just go into 5 minutes and I'll show you what actually happened. 5 minutes. There, you see that? And that was because Saudi decided to voluntarily cut some output themselves. Interesting enough, UAE has also cut their output by 100,000 barrels just yesterday as well. But the best dominated, and they just pushed it back down, and not just back down, back below that last. Look at the narrowing range, the uncertainty in the market is just incredible. So I'm just going to go back to hourly, and what I tend to do is I usually tend to look at Brent as well, just to see and make sure that both these oil instruments are on par. Where can I find this? Brent should be here. Okay, so here's Brent, and Brent is showing a very similar pattern, but a bit more uniform, if I may say. It's almost like a descending triangle going on here. Do you see? I can't be fully sure, if I'm honest, because that peak should have been much higher for it to be a proper descending triangle. Or it could just be some sort of pennant behavior, but again, I can't be too sure this time because the pole of the pennant is pretty short for the length of the pennant. Overall, if I was to take a position, judging by June contracts expiry coming up, I would expect oil to recede. And again, I've said on my last analysis, I hold by that thought. But you know, we could be surprised. So you know, for example, we could see Brent just going to that next level here, which is around the 34-36 mark, or in the case of WTI. In the case of WTI, we might see price get pushed as high as 29.30 perhaps. I'd be a bit gutted, if I'm honest. I'd be quite gutted. For WTI to hit 30 at this moment in time is way too early. But then again, markets are fickle. You just never know what's going to happen. We can take the best sort of estimate that we can make. So based on this, I'm going to stick by my guns that oil is still yet to fall more. I would expect it to come down to at least 20, possibly 18. At least. I'm not saying that's where it's going to come. So 20 is a beautiful mark. Here, I'll just get my pen. Yep, around here. Yep, it's a nice level here, around 20. Possibly up to around, well, let's just say 18, 17, somewhere around there, 18 mark. Worst case, we could possibly see, if things go really pear-shaped with the June delivery, we could possibly see oil come to 10 again, if it does. But the point is, oil is moving sideways, and as you've gathered from my conversation, it could go either way. I'm obviously more biased towards the downside, but it could go either way. So what I'm going to do is, as oil is moving sideways, I'm going to take a new straddle position. So let's have a look at our existing positions. What's happened is I'm exposed to a long oil at the moment because I had a put which was closed automatically yesterday with a loss because that expired. So obviously the markets didn't move on time to materialize the value of the put. So what I will need to do is I will need to close this oil long, that's a CFD, and I'm going to go into the straddle. I've done some risk rewards here already. They're looking pretty alright, you know. So I gathered that I need to go for a 25.5 call and a 23 put. I'm going to use a 2-to-1 ratio, and I'm going to go for a really small trade to begin with, and once I've got some direction I'm going to add more trades on. So I'm just going to go for 300 put 23 options and 100 call 25 options. So you can see I'm heavier on the downside. But either way, if oil does move up substantially, the profit on the calls should outweigh the loss on the puts, and we should break into profit. So that's the position I'm going to take. So I'm not going to open my positions just yet. It's only 7:25 AM. I want the European markets to open. I want London to open and see what these guys do, just for a little bit more confirmation, if they give me confirmation, and then I will open the positions. So, but most definitely I will open the positions today. Okay, so it's almost 11:30 UK time now, and oil is moving at last, albeit slowly. It's moving upwards, as you can see. I'm just going to zoom in on the hourly basis. It's just creeping up. Not what I want. It's up 3% already. Not what I want, because I'm more inclined to the downside. But I've taken my position. I'm not going to get scared by these little movements because I'm going for a straddle. So I've taken my position, which is I've taken a call and a put with the strikes that are close to the money.